We haven't seen this happen since 2021, but when it did for stocks, it led to something pretty bad. What is it, and why does it matter for all of us as traders and investors? In today's video, we talk about extreme greed coming back into the markets, and we discuss the options and why Wall Street seems to be taking advantage of one particular thing. As we hit trend lines, we find Ethereum and other cryptos breaking out, and of course, everyone is hyperactive on the bullish run. Could it be a buy the rumor, sell the fact? So far, we've got a couple of big earnings, and this week kicks off Tesla, Google, and a lot more. Lots to get into, guys. Join us as we cover stocks, commodities, and cryptos in more detail for the week ahead. See you in a moment. Well, welcome back everybody to the special weekend edition of The Daily Show. My name's Tom. In today's video, we have a lot to discuss as always. Macro data, plus of course, key money flows, including some dark pool trades from Wall Street that you need to be paying attention to. Let's have a quick summary of what happened though. It was hypergrowth stocks, it was semiconductors, and a bit of a resurface of Tesla after, of course, its recent woes. But to mark really everything, it was all driven by retail. And just a quick reminder before we get into the big data driven by retail, if you haven't already, come and follow me over on LinkedIn. I've got a post in the links description and pinned comment down below, and I'm making a whole bunch of helpful psychology and of course risk management and also investment tips over there. So make sure to drop a follow down below if you use that platform. I am getting quite active on it, which is awesome to see. Now, let's talk about retail activity. Guys, we have not seen this in a while. 20% plus of the market is now made up of, you guessed it, us. We are trading at heavier levels than we have for years. And in fact, the last time we saw something like this was 2021. And we all know exactly when it happened, when the rise of ARK-K and Cathie Wood funds started to become hyperbolic. Now, did they get out of control? Absolutely. Are we at those levels yet? We're certainly starting to see some of those movements on things like RKLB, Hood, PLTR, and others. But just remember, it only ever ends one way. Eventually, there is a correction and it will be big. That's not to say there isn't more upside, but you've got to remember that Wall Street is most likely eventually going to pull the rug. And you might ask, why is this? Well, there are a couple of reasons, and it actually has to do with why hedge funds are super behind what retail is doing. First up, extreme greed has taken over. We've ticked back into the plus 75 of the fear and greed index. And of course, we've also seen zero DTE options expanding. And they are expanding in a massive way, according to the latest details from Goldman Sachs. And I couldn't quite believe it when I first heard it. Retail makes up 2/3 of all of the daily trade volume. That's right, we make up most of the transaction volume of zero DTE options, and it is becoming a circus. We're almost like we're going to literally the casino and everybody is involved. And you can see here, since their introduction back many years ago, we've now seen them take over, and it is a huge point of view. Look at the dailies compared to the weeklies even, and of course the monthlies pale in comparison when it comes to zero DTE options, and of course the fact that retail traders are trading them. And this means that there are probably going to be a few shenanigans on the horizon. Yeah, Wall Street will most likely eventually pull the rug on us, but timing will be everything. And as you can see here, it looks like they are massively short. The last time they were that short, according to Gainify here, was over in this period. And what we saw, that's not the straightest line you've ever seen, but you can get the idea, was a little bit more action in terms of the upside and then a rug pull. And this actually happened in 2024. And the excuse there was, of course, just basically a market that ended up wanting to sell off due to too many people short, too much bullishness coming into the markets in terms of retail, and they wanted to get a cheaper price. And eventually that always tends to occur. But remember, hedge funds are notoriously behind. You can see they were during 2022 and 23, and it took them a while to actually get positive. And for a long time now, they haven't believed the facts and figures. So always remember that stat. Hedge funds tend to actually not perform well versus the S&P 500 over a decade-long period. And I think it's like 85% plus actually underperform. Now let's have a look at this earnings season, because you guys know that this earnings season is going to matter. We already know that Wall Street believes it's going to be fantastic. In fact, Wall Street's forecasts are on the up and the up and the up. But is it enough? Well, the problem this way is that we've just had one of the largest and fastest corrections of all time, what we call a V-shaped correction. It's actually the third largest, and it means that markets are pricing in for perfection. The reason we know this is because we've already seen a few of the banks, such as JP Morgan and others, come out, and they had great earnings, but they actually went down on the day. We've also had Netflix just come out with a result, and it was good. But at the same time, the stock dropped over 5%. And just before the announcement, guess what we saw? We saw large transactions come in. In particular, it was a dark pool transaction. And straight up 5% the next session. So could it be a buy the rumor, sell the fact? It's certainly starting to shape up that way. But remember, that is a prediction. So it is better to actually see the reality start to come through. And we'll look at some of the key levels on the charts later on in today's video. Let's now take a look at the NASDAQ 100 advanced decline lines. You guys can see here very clearly that we actually do have a decent amount of breadth. According to the latest AD lines for the NASDAQ, we're actually starting to see all-time highs here in terms of advances. And we do have a decent amount of breadth coming through the main technology line. And that's important because remember, if technology leads, which it does 83% of the time in the markets, then it usually means that everything is kind of rising up together. Now, that doesn't mean we don't get corrections. Wall Street, I'm sure, and particularly hedge funds, would like to see a correction right now. But there are some good data numbers coming through. If you have a look here at the big four indicators, according to advisorperspectives.com, since the end of the recent recession of 2020, we actually have just got some decent June data. It's all like kind of positive. And you might say, well, this data is fake. This data is not real. It's no good. But the market will still go off some of this information. And of course, what it does is it forward projects it out to try to figure out what the market is currently worth. And what that market is currently worth is a lot, according to Wall Street. Look here at Nvidia, TSM, AMD, and others in terms of their valuations moving forward. What I noticed was some massive numbers. Let's have a look here just quickly. So Nvidia went from 26 during its April sell-off all the way to 40.1. Now, this is on the forward PE. And I can tell you 40.1 is around the average. So you might say that's really expensive, but this is actually pretty normal for Nvidia. So it's repriced itself back to kind of where it has been during a pretty bullish, I guess you would say animal spirit strong time. AMD's gone from 22.8 to 40.6. So starting to really get up there again. And AVGO has gone from 27.8 to 41.3. So what this basically is telling us is that we have a repricing of the market back to perfection. And with TSM and ASML, they haven't quite kind of done the same thing. You can see here actually TSM is kind of trading right on the average that it has been for a while. So it's not all stocks, but certainly of the big leads, the semiconductors that we've been talking about, a lot of them are now priced at their perfection. And they're not priced at super perfection, but they're certainly priced at what you would call fair or above fair value. Now let's go and have a look at the big transactions. There was one particular one here from QBig, which is a relatively new Invesco top triple Q ETF, but we did have the largest transaction ever to go through it. Now, why is this important? Well, it happens at a peak. And the other reason why it's important is it seems to have actually been pretty good at predicting kind of temp tops and temp bottoms of the market over the last year. Now, never go with this by itself, but the number 2 largest trade came in. That ended up being the high or very close to the high of the previous period. And the number 3 largest trade was very close to the low. And now we have the largest trade right here at the top of the trend line. And you guys know I've been looking at this trend line for a while. We've been discussing it. We've been discussing, okay, the possibility is there that we squeeze, but it does seem like there's a lot of correlation. The dollar going up, all of the markets kind of finding resistances at the same point. And of course, hypergrowth stocks and extreme greed starting to come back in. So let's have a look at the bull case scenario. And that has to be Wall Street's behind. CTAs in particular, Commodity Trade Advisors. These guys are momentum-based funds and they are super underperforming. Usually they should have already been buying in by now. And according to the latest results here, we're starting to see kind of reads that according to UBS, they're going to have to really speed up here over the next 2 weeks and start purchasing in. So they might want a cheaper market to try to purchase in on, but they are super far behind. And of course, that could be big, especially if the market keeps squeezing. If we break through some of these trend lines, what could happen? CTAs would be forced to buy, money on the side might be forced to buy, and then all of a sudden, you've got an even bigger squeeze on your hands, similar to 2021. And remember, some of those companies were buying at terrible prices. Remember when Wall Street thought Zoom was the next biggest, best company in the world? Yeah, they weren't so correct about that, but they did buy it at hundreds and hundreds. It was like $400 or something on the markets. FMS cash levels dropping. Now, this is an important one because, again, it's symptomatic generally of a more macro kind of thing, as maybe a temporary high coming in and more of a wishy-washy market. But certainly that's just something to look at. Now, another bit of good news is got to be liquidity injecting back into the Chinese market. Now, you guys know we've been talking about this one for about a year, and I've been pretty bullish on it, and so far so good. And it's a mixture of climbing the wall of worry and just realistically that they've been injecting tons of money. And when a central bank goes for this injection, they don't tend to do it just for a day. They tend to do it for quite a long time. And we know that in China, they tend to do it for like 5 years. It's like a massive amount of time. Now, recently we had one of the biggest dark pools we'd seen in a long time on Yin, which is a triple levered fund. So far, the actual market's gone up. And we've got a chart later on for the Chinese market to show you a very important level that's starting to get pushed here over the last week. So it's certainly a very important point for China, and China can move separately to the rest of the world as it's kind of more based on Chinese liquidity and some of the taxation systems over there. Decline in liquidity. Now, this story is obviously scary, and there's no doubt that you should be paying attention to this. We've got the Japanese elections, I believe, this weekend. We also know that government bond liquidity is getting worse, and this is because people are saying, you know what, I don't really believe in this fiat-based trash system that we have right now. A lot of you guys don't either, based on the comments. And I'm starting to say, you know what, I need a bit more money for this. Wait a second, this is actually not no risk. This is a little bit of risk here that we're looking at. Now, however this plays out, remember, generally speaking, you can pretty much believe in US bonds because markets are going to hold them up more than they're going to hold others. But still, liquidity is an issue, and that could become a big issue in Q3, Q4 as we start to see a lot of the rollover of treasuries. And remember, the biggest rollover ever recorded is coming. So make sure, if you're not aware of this, subscribe to this channel. We'll be covering it all the time together as we're going to break down these massive bond auctions that are coming up. They will be important for us, and they could show a crack, which of course could be used as an excuse to sell off the markets. Commodities, excluding gold, love this chart. You guys know I'm a pretty big fan of commodities. Obviously, I've been known, and you guys are known as well, to be massive gold bulls and silver bulls and Bitcoin kind of bulls recently. The triple three that I call against geopolitical tensions and where we are right now. But could it actually be the next big game plan is commodities? I'm starting to think it is. This chart kind of shows that commodities are cheap. And obviously in our private community, links in the description down below as well, I've been discussing this concept for a little while. And that basically is that we're seeing certain hard metals and minerals being purchased up by even tech companies, kind of, really combat this new AI revolution. It's going to be an arms race, but the arms race could actually be in the land and the even the water potentially here, where we see everybody need certain things for not only the defense spending, but also the AI build out. So it's going to be a very interesting time over the next decade in something that has been hated. Remember, commodities only make up like 2% of the S&P 500. This really, I think, puts a lot of risk on the S&P as actually being an excellent ETF in the future. But anyway, more on that in the future. Christmas in July. What is going on? So we've seen a massive rally. We've obviously kind of started to top out here at this point where we've kind of got this type of market, what we call a dull market. Not usually one you want to sell, but we do know that something traditionally based on the last 50 years of data tends to happen around here. And that could be choppiness because, of course, we do know that although we're in a period of AI versus the dot-com boom and generally there's more to go, we do also know that this can be a choppy year. So it's the year 3 in the bull market, the post-election after a big switch. All of these things tend to mean that you need to be risk managed. It's just very important to do so. Now, this earnings season, this is the one. This is the week that kicks off some big tech. And we've got 2 big techs here that really are notable. We've got Tesla and, of course, Google. And they're both coming after the close on Wednesday. Now, these will be large moves. Of course, it's expected that we're going to have quite a lot of options moves. Here are some of the expectations. You can see here Things like Tesla are going to move plus minus 7.5%, according to the options market. We have Google moving plus minus 6, and we have Intel moving plus minus 9. So if you're trading any of these particular stocks, just remember the options market has already kind of figured out what the average move should be, plus or minus. And if you are trading options into them, remember this can be scary because they do instantly lose some of that value. So just remember, if you've ever wondered why a stock moved and you didn't get paid out properly, a lot of it is to do with the market already implying that a big move is coming. Speaking of big moves, crowded positioning, according to Goldman Sachs, is about a week out of date now, but you can see here that there are quite a lot of positions. So if you're interested in this one coming to earnings season, certainly worth paying attention to. All right, guys, well, let's jump into the S&P 500, look at the options flows. First up, you guys know what I'm going to say. Yeah, we're at that kind of trend liney level. Now, I don't really like trend lines because they're a bit subjective, so never use them as exact numbers. But certainly we're coming into one that's important, and it's a mixture of things. It's a 6,300, 6,350 kind of core wall, so we know that's there. It's a mixture of one of the fastest V-shaped recoveries ever, and it's also a mixture of me leaving behind tons and tons and tons of gaps. So if we have a look at the actual futures market action, you can kind of see here that it's got this temporary low on it here around 62. And then we have a series of barely higher highs, which is what we call a dull market. Now, you shouldn't sell dull markets traditionally unless you know what the hell you're doing. And the reason is because they can squeeze the rubbish out of you, yeah? But there is also another case. What if this was a buyer's climax, some type of UTAD style distribution? Now, we won't know that until, of course, we break below 62, which is the level that you need to be watching. But at the moment, the bulls are still in control. And do remember that this market can stay irrational longer than you can remain solvent. Even if you don't believe it's worth this much, it is what it is. So you've always got to stick to that. And you'll notice that the NASDAQ in particular and the Russell 2000 have both hit critical levels while the S&P is still dilly-daddling around. It kind of needs to hit around 6350 to really hit that massive resistance. Now let's break down the S&P. So you guys can see here, 6,300, boom, massive level. No one's of a surprise here, I'm sure, if you've been watching for a while. 6,350 as well, massive call wall. You know, we've got a lot of calls up here. We have people jumping on puts as soon as the market sells off, and it's creating a trapped coiled zone, or what we can call a pullback in time. So for now, this is exactly what 1998 looked like. And we'll have that in our next video, so make sure to check it out. But a lot of you have seen that chart before. Calls now absolutely dominating the big options expiries of the month. And it's clear that the FOMO is back. Tesla, what's going on here? Pretty strong, 330 break, suggests 350 could be incoming. Obviously, it's all down to earnings. So earnings this week, hey, I don't know if it's worth speculating on, but I'm sure the bulls that bought 280, 290 area, you guys will be happy with the run so far. What about NVIDIA? Well, you guys know that NVIDIA is a monster stock and it has hit that kind of 175 zone, which I'm a big fan of course, in terms of I've been looking for it for a while. It did kind of get round there, which is good enough for me. But the reality is that if we continue to push higher, we can do so. Remember, we're back to kind of that average. 40 PE is forward is high, but it's not extremely high. Extremely high would be like 50. So it's kind of like price to perfection, but not super perfection, if you know what I'm saying. And this is arguably one of the most important stocks in the market. So of course, we'll keep tracking at 175 current resistance. Latest data came in from the options market. It's not freaking out as much as it was just before the earnings. So again, they're probably kind of happy that Netflix and others came in and basically beat expectations. Even though they sold the stocks off, we're not seeing a lot of trouble in the bonds market yet. So of course, we'll keep watching that one. Yields, again, not going past 5%. 2 dojis means that this market has absolutely no idea what it wants to do next. And this could be bad. So remember, just have your alerts above 5.05, look for a close. If that happens, probably a bit of a freak out in the market. At the moment, it is waiting for things like the election, etc., etc., etc. In Japan, of course. Now let's go over to ARK. So you can see here that hyper growth stocks are going ballistic. And this is a great way of tracking it. ARK versus SPY. And yes, we are overbought. Yes, we've seen an extreme move. However, you remember, it can get more extreme. I would think this is around the level that some people will take some off the table, but you don't know that. So at the moment, it is a series of higher highs and higher lows, and the trend remains intact for now. The US dollar also has remained more bullish than bearish since we started talking about that down here. And you guys know I kind of am looking for the dollar to move towards that 99.20 and possibly even parity, which is the 100 level. So this is kind of the zones that we expect potentially the dollar to get to. What about gold? Still chilling, nothing much. Looking for a 33.78 close plus to really get the bulls back involved. And at the moment, I call it neutral bullish. Silver, on the other hand, has looked a little bit better. It tried to break through that 38.40 zone, 38.37 that we've talked about. If it does, could keep going up. You guys know I want 42.43 ideally for silver. And I think it's still undervalued even at those prices. You know, we've talked about this a lot, as you know, but I am still a big fan of the silver, and it's doing okay. US oil, no updates, guys. You know what I feel about that. And Tesla, 330 plus. I mean, what seems to be happening here is it's squeezing the wall of worry a little bit. 350 is possible, but it really just comes down to earnings this week. That's all that really matters. And I thought I'd just kind of show you this one, just if you're not aware. Again, look at RKLB, look at things like Hood. Let's look at the Hood. There it is. Yes, it's overbought. Yes, it's actually at extreme levels now. And of course, we actually tapped it. So this is also, I think, a key point. Coin, when it first came out, was a big IPO. And a few people famously bought it at this price and got smoked. But at the same time, it's back there. It's hit it. Could this be a take profit zone? I would say some traders will at least consider taking some off the table here. But this is the hype train that's been going on. And what that's done is it's actually completely dominated even the top end here of this flag position. So if we just grab the flag, there we go, and we extrapolate that out, it's actually pushed into it, and you can see it's overshot a little bit. So a lot of these stocks have hit into big zones, and you can just see here, like even that one that we bought up last week, IBK, so which is basically a broker as well. Anything that's to do with brokers and the possibility of crypto and stuff, look at them go. I mean, they are absolutely flying at this stage. One of the hottest sectors in the market, along with quantum, along with AI, and anything to do with crypto, really. Let's move over now to semiconductor SPY. As we see here, semiconductors taking a little bit of a breather, but still in general finding themselves to be more bullish than bearish. And we're not seeing really an outperformance here of defensive. So we're not seeing things like staples totally beating out the market yet. So again, if that happens, then that's usually showing us that we've got a little bit of risk off. It's not happening at this stage. We just haven't seen that defensive market action push yet. Looking for it this week, but haven't seen it yet. HSI, Chinese market, new high here. And you can see here the weekly close was quite strong. It suggests to me that more liquidity is coming in. We already alerted to this. And again, it's a dull market. Look at it. Series of higher highs and higher lows that we've mentioned. And these can suddenly go ballistic when they do go, because we know in China, when it goes, they buy. They buy and then they dump. It's pumpy dumpy, like a biotech stock, except it's an entire index. And you can see the pumpy dumpy is real. Remember, guys, if you ever load up a chart, have a look at the left-hand side. Understand how it trades. And once you understand how it trades, then you can kind of get ready for what should be expected more so than anything else. Like if you trade Rocket Lab, you better know that's pumpy dumpy, because that's what happens. It pumps and it dumps. And that's just the reality of certain stocks. US 2K, it's all at supply and it's all consolidating. So break below here, of course, we're going more bearish. Break up here suggests that we're squeezing higher. No updates there on US 2K in terms of other than that. And the NASDAQ smacked that trend line perfectly. And this is the one that goes through previous periods. So basically what we have here is we have retail investors getting to their highest levels. We've got zero DTE options getting out of control. We have a couple of correlation hits here. We still have a bullish market, there's no doubt, but we're wondering how much longer can it go for, and timing will be everything on this. Speaking of timing, it has been pretty good in the crypto world. XRP obviously going ballistic. Some people are going to have this as a head and shoulders possibility on Bitcoin. It is, but at the moment, remember the trend is still bullish. We're looking for kind of a breakout here and close above 120,500. Ethereum's on its way to 4K, at least the way it looks here. I mean, that is pretty beautiful stuff. I mean, consolidation pit, rally, dull, consolidation pit. If it rallies again, eventually, hopefully it hits 4K, which is that huge resistance level. And yeah, I mean, the crypto world is on fire right now. Everybody wants to be part of it. It just hit an all-time high market cap, and it is really where a lot of the flow has gone. Now, in terms of Japan, you can see here we've got upper house elections over the weekend, which is a thing this time because of the bonds in Japan and how that's looking. Then, of course, we've got a bunch of different big governors coming out from different places in the world. And then Thursday's the main day today from Europe, from I think the pound, so UK, and then also a little bit from the US, flash manufacturing PMI, etc. And then we also have some unemployment claims. Really, this week, though, is likely to be driven by earnings. And it's that big one, that Google and Tesla that really kicks off the bulk of the tech. And remember, the next 2 weeks in particular are super important. So if you haven't already, make sure to subscribe to the channel if you enjoyed the content today. Make sure to follow us on some of the platforms as well. And if you want to find out more about the data-driven, technical analysis-driven trading and investing that we do, you can check out some of our courses on the flash sale at the moment in the description down below. Guys, I hope you have a wonderful family weekend with your friends and family. And obviously in markets, this is one of those pivotal weeks. Is it a buy the rumor, sell the fact? Is it just squeeze and squeeze and squeeze until no one has any money anymore and everyone's all in? If it goes that way, it's going to be one of those epic crashes that comes through. It's going to wipe a lot of people. If it sells off here, it could be more orderly. And do remember, Wall Street's behind. Retail, technically, have been the winner of this big V-shaped rally. So they're going to want to eventually get us. The question is when. Bye for now.